Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on February 12th with some commentary here in the energy markets. So let's get started. Crude price is a bit firmer. March contract now, we're up about 91 cents, trading around $100.85 a barrel. So getting a bit of a breakout here from yesterday's price action. Brent a touch firmer. Up about 33 cents, trading just around 109. So really seeing that spread tighten up quite a bit. Got some ideas on how you can potentially take advantage of that. If you want to learn, give me a call. We can get into more detail. Nat gas making a nice turnaround. We're up a little over 3% right now, up almost 16 cents at around 4.98. So that market kind of starting to come back. That's been a very volatile market. Some great trading opportunities, but as traders, you got to be very careful in there, not for the faint of heart. A lot of volatility. So be prepared for that if you're stepping into that market. Looking at the complex here, we're a bit mixed. RBOB's up about 3.25 cents while the heat's down almost a penny. So a little bit of disconnect there in the complex. But, you know, shifting back here to the crude oil market, crude prices were pushing on a double top yesterday. As many of you know, it's no secret. I'm a bit of a bear on oil, but prices have been moving up here a little bit. And I think a lot of that has to do with the equities market. Currently where the price action is right now, we'd have to go all the way back to seeing the highs that we saw back in October. And back in October, we saw a lot of resistance in this area before the market kind of came down. So, if we look at the EIA data that came out here this morning, there was a build in the stockpiles. Yesterday's API private data was showing a draw. Today, showing a build here. So some disconnect there. And the build was bigger than what traders were looking for. Most traders were looking for a build this morning, in this morning's data, about 2 million barrels. And that actually came in a build of about 3.2 million barrels. So a little bit larger build, putting our total stockpiles now at around just over 361 million barrels. And to put that in perspective, and this is the one thing that I point out in so many of these videos. If you look at our lowest stocks for this time of year, we'd have to go back a little ways here, and that was putting us down around 268.8 million barrels. So as you can see, we have over 90 million barrels more oil in our total stocks here. And we're just slightly off the highs here. So it's still running well above what the 5-year average is. So, in my opinion, I think the market is pretty well supplied. Now, there was some news that did kind of ignite a little bit of fire underneath some of the bulls here, where the EIA was projecting that we possibly for 2014 could see global demand creep up just a little bit. And there was some talk also that we could see U.S. production fall just a little bit. But the reality of it is that can change at a moment's notice here. And so although the market is reacting to it here in the short term, here in the front month, my overall views are this. I think the market is still very well supplied. The technicals, if you follow short-term technical indicators, they are showing overbought conditions right now. But you got to understand how those technical indicators work. And they can show overbought territory here for some time, yet the price action on the charts, it has been, I will give it, it has been a little bit bullish. But there are strategies that you can put on, and I've mentioned this in a lot of my posts here, utilizing a bear-put ratio spread. And I think that could potentially be an effective way to trade this market, especially at these price levels. So if you have an interest in trying to take advantage of crude oil pulling back here over the next couple of weeks and maybe even a couple of months here, give me a call and I can get into a lot more detail and explain the trade and exactly how that works. One quick thing I do want to point out here is take a look at the capacity utilization right now. A year ago this time, we were running about 83.8. Currently, we're running at about 87.1. So while there is room for that demand to go up a little bit, the capacity utilization to go up, which could in turn, put some draws in the stockpiles, we're already running quite a bit higher than we were this time last year here. So that leads me to believe that there might not be that much more room to see that much more of an increase, which then in turn could help possibly draw down stockpiles. So something to think about. Certainly give me a call. We can get into a lot more detail. I can give you some specific trading recommendations. And of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.